Felix here, 17 hours left and counting down till the Fed hits us with their biggest hammer yet. Why? Well, there are, I think, 3 or maybe 4 reasons for that. I'm going to run you through. I'm going to show you the charts. I'm going to show you the data and the numbers so you can come to your own conclusion, because none of the following is financial advice. I'm not a financial advisor. No, I just share with you my thoughts, my trades, and much, much more. And I hope it's going to be somewhat eye-opening. So, indicator, we are at greed. Generally speaking, we're near the top end of greed. It isn't the best time to buy stocks. There's a rule of thumb, I would say, tends to mean that the market's a little overdone. Now, you might be thinking, but Felix, we're in a rally. Everything is going up. Everything is wonderful. We love it. Let's keep going up. Well, this is 2000. I started investing, by the way. This is a true story. I started investing about here. That was Felix. He lost about 50% of his money. This was a young little Felix, and he was very sad afterwards. This is 2000, the dot-com crash. And we had some whopping rallies in this crash. Didn't stop the crash. It just got some squeezes up, got some people excited, lost a lot of people a lot of money. If you look at where we are right now on the NASDAQ, which is the most rate-sensitive space there is, because it's, generally valued on forward-looking statements. So NASDAQ going up, RSI going up, and what's the big peak? It's exactly with RSI, which is it's a resistance. It's an indicator which tells you whether you're oversold or overbought. So when we are above, this line here up there, it basically says to you overbought. Comes down, stock market comes down, right? So that's kind of like one little warning sign here. But for me, the big hammer, the thing that's keeping Jay Powell awake at night, he's waking up in the night, drenched in his own sweat, screaming and demanding another sherry. This is it. What the heck is this, you wonder? Well, there's 2 things on this chart. There is a blue line. The blue line is the interest rate of the US of 8. And we're sitting at 4.5%. Put a line in here so you can see that. We're sitting at 4.5% interest rate, right? And it's gone up tremendously since March 2020. You might remember that. We were then at 0, right? The guys have done some really, really crazy stuff. What's this? This is the Fed's Financial Conditions Index. And financial conditions should go up when interest rates go up. And they did that very, very politely until about July of this year. Then they dipped. We got our August rally, which was a bit of a false rally, if you remember. Then they were continued up because the Fed was like, we're going to hit you even harder now, right? And they did with that massive rate hike. And then we've departed. And we've sort of departed all logic and sense. And we've just gone down with financial conditions, which means conditions are easier. Credit is easy. The market's going up. Everybody is partying and drinking only champagne and, that sort of thing. This is what Jay Powell has to destroy tomorrow. If he's going to do his job, this is what he has to destroy. If he doesn't destroy this, then he believes they've done too much and they shouldn't be raising rates at all. That's my view on that. That's just my view on that. Now, what am I doing to make money out of this? 3 things, actually. 1, I'm trading earnings like a mad person. We've done the last 12 trades. We've got a 13th trade open at the moment, but it's still open. It's looking very nice on Caterpillar. And we made $1,500 profit. These are small trades. So we made a 12% return on 12 trades in 10 days. Not too shabby, right? If you want to know how we do that, well, you know what to do. Links down below in the description. If you have 5 figures or more, 6 figures, 7 figures, 8 figures, whether it's in cash or stocks or bonds or whatever else, you qualify for our coaching program. So give us a call at felixfriends.org/coaching. We'll walk you through exactly what it is. We'll answer every single question of yours. And why a call? Well, if you go to felixfriends.org/coaching, there is a website, there is a video, it walks you through a lot of it. But honestly, it's a conversation I think that's worth having. It's just better to be able to actually answer your things rather than send a million emails back and forth. If you're new to investing, also brilliant. We also have a pre-recorded course. You also go to watch me trade live every week and so on. Like I traded live yesterday. You saw those trades I set up there. But coming back a little bit to some more macro, this is, I want to say it's Goldman's. I think it's Goldman's. And Goldman's are showing us in a little slightly fuzzy chart that the long short funds are basically at really, really high leverage again. And the same thing for the overall book. The overall book is also at relatively high leverage levels. What does that mean? They're actually fairly heavily invested. So they've chased the rally up. They were undoubtedly too late for it. And therefore, there isn't that much more room to go. Now, how about this one? This is the average S&P 500 implied move when we get FOMC data out, as in tomorrow, interest rate decisions, right? And what's the implied move for January? Well, it's a significant drop down. So are you prepared with your portfolios for significant drop down? Do you want to know how we can do that? Well, I just set up some hedges. Cheap hedge, anyone? You can set up a cheap hedge and you can get a potential 700% profit on that hedge. It literally, I never understand why people don't do this. And this is why I teach it. And that's also why we run a webinar on the weekend. You can spend for $100, you can hedge a $40,000 S&P 500 portfolio. Isn't that cheap? I think that's really cheap. And if the S&P goes down below 388, well, you're in the money and you're potentially making a 7 times return. So for me, that's a no-brainer, right? $100, knock yourself out. I did a little bit more than $100, obviously, but you know, that's kind of the theory here. Now, if you're thinking, well, hedging isn't for me, but I want to just make money, well, we got something for you. We've launched a newsletter. It's called the Trading Floor Whisper. And in it today is a trade that I've done, that my head coach has done, and he writes it, and we discuss it every morning. It's a trade that we believe is going to go down 75% on the stock. And we're going to show you 3 ways of setting that up, that trade. And I'm expecting up to an 8 times profit on that. And you can spend $145 to set up the trade, potentially reap 8 times. The maximum risk here is $145. It can never be worse than $145 because we like limited risk. And that's the sort of trade that we share in our newsletter. The last trade, by the way, that we shared was a Tesla trade that made a 550% return in 3 days. This is not your every single day you're going to get the same sort of trades newsletter. This is like, you look for like the outliers, the golden opportunities, the China opening, the Japanese yen, the Tesla, you know, this kind of stuff, the unusual stuff. It is a paid newsletter. If you're interested in signing up for it, you can do it. It is risk-free. Why? Because it comes with a 7-day free trial. So you can literally sign up for it. You can see the trades. You can decide whether this is something for you. Decide whether you want to miss out on this. You have a choice to sign up for the monthly, which is $87, or if you sign up for the yearly, you get 31% off. And you can do so at felixfriends.org/trade. I'll put the link down in the description as well. So yeah, just to recap here, our trade here, I think we're going to make it 700, 800% return on this trade. And you can do small trades, so don't throw everything at it, obviously. I'm not a financial advisor. Not every trade we're going to do is necessarily going to make money, but we like the risk profile of these. Now, to leave you with one last thing, the Morgan Stanley Global Risk Demand Index, it's a catchy title and a half, isn't it, has risen sharply, and it's nearing +3, significantly higher than the reading on the 12th of August, which was 4 days before the market peaked and then tanked. This is a pretty extreme reading. See the second chart. So we are at +3. That's here. If you know anything about what normal standard deviation curves look like, they're meant to look something like this, right? So you're at an outlier here, and you are probably in the 5% sphere of likelihood. That's where we are in terms of global risk demand. So it's a significant warning from Morgan Stanley. It's a pretty rare warning, essentially saying, hey, this stuff could come down as quickly as it has gone up. So I leave you with link down below. If you have 5, 6, 7, 8, 9, 10 figures, we never had a 10-figure portfolio or 10-figure investor with us. 9-figure, yes. 8, quite a few. 7, lots. But also lots with 5, 6, and you want to get there. So if you want to join an ambitious community, then give us a ring, felixfriends.org/coaching. I want to say thank you for watching. Thanks for tuning in, especially if you've hit that like button. See you on the next one.